Broadcasting live from the Business Radio X studios in Atlanta, Georgia, it's time for Atlanta Business Radio.
All right. Next up on Atlanta Business Radio, we got Greg Silberman with ACG Wealth. How'd that go for you, Greg? You learned something?
I did indeed.
You got to lean in there. Don't let that microphone scare you.
Yeah, I did indeed. I learned a bunch of interesting facts about commercial properties I didn't know before.
There you go. Well, tell us about ACG Wealth. How are you serving folks?
Yeah, certainly. So ACG Wealth is a local wealth management business. We have several $1 billion under management. And we're really just about people first. I mean, we try and differentiate ourselves through our client service, through our communication. We believe that every client who comes to us needs to have some kind of financial plan, whether that is no matter how much money they have, no matter what stage they are in life, everyone needs a plan. I'm the Chief Investment Officer at ACG Wealth, so I know we'll get into this in the conversation, but essentially I'm not at the forefront when it comes to clients. I'm kind of...
They hide you in the back room with the Red Bull and Cheetos?
Like a mushroom, yeah, in the dark. But I get to do a lot of cool stuff, a lot of interesting research and, help clients.
So now, is your work part of the actual formulation of the plan that the salespeople and the more account rep people are explaining to their clients?
It can be. Sometimes it's not generally. What happens is the plan is run through some pretty sophisticated software that can handle any combination of client circumstances. So when it lands on my desk, it's essentially the client needs to achieve a certain kind of risk-adjusted return over a certain period of time to meet their financial goals.
And so then now you build that kind of portfolio that's going to help them do that?
That's right. That's correct.
So you customize it for each client?
We do to a degree, given the circumstances and given the level of wealth. But we have some building blocks which we maintain and use consistently. So we do that pretty much for resource perspective. So I have some portfolio managers who work for me who are looking at, a certain selection of single stocks all the time, all day, every day. And there's just too many stocks out there to follow all the time.
And then you're saying, okay, these 5 stocks, these are going to be good for this group of clients. Let's let them know that this is an opportunity.
That is correct. And generally, when you're talking about portfolios for clients, you're generally talking about, more than 5 stocks. 5 stocks can have a bit of zing, which people don't like the volatility all the time.
Right. So it's a balance between the volatility and the returns and their risk tolerance.
Exactly right. So I say to my guys all the time that I consider it a failure if a client calls me up and says, the market is my portfolio is just so wild, I can't tolerate it. I'm not at the sleeping point. For me, that is kind of, a misdiagnosis of the client.
So you're looking for predictability?
To a degree. My profession is very difficult to get predictability, yes.
And especially because there's so many outside things that could, screw up everything.
Yeah, no doubt about it. If you just listen to the news today and just...
That's why I don't listen to the news.
Exactly. I mean, you'd think we're going through, some pretty tough times or whatever it is. But frankly, we are actually going through the most exciting times, I think, to be alive, given technology, given disintermediation, just the scale of change that's occurring in the world and in the economy today is just very positive for the average person.
Right. It's one of those things where if you look at history, the time we're at today, historically, for the most amount of people living outside of poverty or living better than ever.
There's no doubt about that.
But if you just read the news, you would think that the sky is falling.
Yeah. I mean, you'd think we're at war internally. But I'm from South Africa originally, and Africa in general, over the 20 years that I've been living in the States, Africa has just seen huge leaps in advancement, and that's simply because they never had the infrastructure we have here in the United States, and so they're now able to implement the latest technologies, from scratch. And so I always give the example: if you travel to most emerging markets, the scale and technology sophistication of their airports is something unbelievable relative to, a Hartsfield Jackson or something like that.
Well, it's also one of those things where we don't really appreciate, if you just give everybody a cell phone, their quality of life improves, exponentially.
Yeah, there's no question about that. Again, to leverage off my South African background, I go and visit South Africa about once a year. And there's still a lot of problems there,
right.
let's be honest, and there's a lot of poverty. But it's kind of incredible. You drive past a traffic light, which we call a robot in South Africa. My daughter loves that. And you drive past a traffic light, and there's generally like vendors, selling you
right.
stuff, iPod cables and hangers, clothes hangers, and they all, without fail, have a smartphone.
Right.
So it's
because
amazing.
That's their lifeline. That's where a lot of the transactions, a lot of the money's changing hands.
That's right. A lot of previously unbanked people,
right.
Which weren't touched by a financial institution, can now essentially have financial transactions.
Right. Yeah. So it is an amazing time. How do you, when you're working in your firm, do you kind of let them know about some of this really new stuff like the cryptocurrencies and these things that are kind of new and untested? Or is that part of a portfolio, or does that just kind of you put aside?
The short answer is it is a part of the portfolio, but it's going to be a very small part of the portfolio because, as you've acknowledged, the risk is high and the return is high as well. We will typically get involved in those kind of situations through private market transactions, so not buying stocks off an exchange, but we'll invest in some early stage technology type companies that are trying to capitalize and
build.
So
you're going to try to touch some of the periphery of it. You're not buying like Bitcoin specifically,
that
or
is
something,
that is correct.
Cryptocurrency
that is
directly.
Specifically Bitcoin, essentially, we've done a ton of research on it. And for one, I think there is longevity in that market. I don't think it's going away. It has some very unique.
Right. Well, you're talking about the blockchain, or you're talking about that specific cryptocurrency?
Well, cryptocurrency is basically built off the blockchain.
Right. But I was just at the FinTech South conference that they just had here, and everybody was bullish on blockchain technology. Nobody would put their money in a specific cryptocurrency, at least at this point that I spoke with.
Right. Well, cryptos are not going away. It's a way to exchange value, again, disintermediating, a corporate, a bank or something like that. So they're not going to go away. Blockchain is very interesting to us. For example, is, with the trust element that's entrenched in blockchain, essentially a distributed architecture where you believe what the blockchain tells you.
Right.
There's some mining companies that are now doing mining.
The diamond industry.
War diamonds.
It's really kind of perfect for that industry.
Exactly. Especially in the Democratic Republic of the Congo, where there's a lot of, diamonds that are coming off market. They're now being tagged on the blockchain and tracked through their whole transportation stream. And so now if it's a legit diamond or not.
It's transparent and authentic, right?
And that's a business we want to be involved in.
Right. So that... So you must be constantly reading all this stuff. It's just that information is just coming out.
Yes.
Like a fire hose.
I am. I do a lot of research. There's a lot of information. Interestingly, my job is actually a lot to do with psychology and emotional capacity of both myself and the clients that I serve. Very often the best transactions I've ever engaged in, the most rewarding, again, for our clients have been ones that, weren't on the face of it, just jumping out at you. Like, you're going to make, tons of money out of this. It's generally the ones that are hidden, or you don't have a good feeling about them for some reason. That tends to work. And that holds true in the market in general. When clients are calling in and they're worried, it's typically because the market has done something to cause them to worry. Right. So that's a bit late for
well, I remember in 2008 when we had the financial crisis there, and my sister is a school teacher in South Florida, and she's telling me her janitor just bought 5 condos in South Beach. And I'm like, that sounds like a bubble is approaching. When somebody who doesn't have a lot of resources is now all of a sudden this real estate mogul is usually, to me, a sign that maybe something's amiss here.
You are correct, generally. Okay, the problem is a few things. You can never identify a bubble when you're in a bubble.
Right, they don't ring a bell.
They don't ring a bell at the top. So, talk about Bitcoin. That was up at $19,000.
Right,
and everyone was, this is the time to get in.
Right. This is early.
Clearly, that was a bubble of sorts. The other problem is psychologically, clients go to cocktail parties and they hear about the latest
they don't want
Facebook
to miss out.
IPO.
Fear of missing out. That's a real thing.
That's a real thing. And a lot of money gets made in a bubble right near the end of a bubble. So it's difficult. That's why I say my job is very psychologically and emotional, trying to control, get a little bit of that action, but not go over the cliff with it.
Right. And kind of help them be prudent about it.
Yeah. So that's why I defer back to the fact that we have a plan for each
That's
client.
right.
And at the end of the day, it's a sane document created when we were all rational and we can, refer back to it. And
you have a true north that you can compare. Like, is this doing what we set out to do? And if we already got the return, maybe it's time to pull something off the table here a little bit. And
yeah, that is right. But generally, it's been shown over time that timing the market, coming in and out, has not been a smart way to go about achieving a client's goals. What really is the smart way is getting them invested at a level where they can tolerate the ups and the downs. Mm-hmm. And so we call that kind of a strategic allocation. A certain amount of stocks, a certain amount of bonds, a certain amount of commodities, and set it and forget it to a degree.
But do you rebalance it?
Yeah, you do rebalance if things get out of whack. I mean, the S&P is up, I think it's up over 120%, maybe more since March of 2009. Clearly, you have to take some off the stock side, maybe go to bonds, maybe go to cash. Interest rates is a problem now. Interest rates are generally rising. We got to take that into consideration for clients.
And then, so now, do you ever recommend something like, hey, why don't you buy this franchise, or why don't you buy a building, or do something like that? Is that part of your responsibility, or it tends to be kind of stocks, bonds, commodities, things like that?
No, that very much is my responsibility. Again, what we just call private market transactions. Mm-hmm. We have a fund where we do these transactions. We do real estate. We buy real estate. We buy actually some franchises. We were just recently involved in a gym franchise.
So your firm actually invests in it on behalf of the client?
Yes, that is correct. But having said that, because we are resource constrained, I can't go run a franchise of gyms. I'm just not an operator. So we will typically partner with an operator, a seasoned operator, or another private equity firm that is engaging an operator and has got experience in that.
Is that unique to your firm, or is that other wealth management firms do that as well?
Well, it is somewhat unique to our firm. We try and differentiate ourselves in the level of access we can provide our clients to various transactions. So typically those transactions tend to be a bit more localized. So you don't have the big New York money center banks following these transactions. They're a bit small for them. And then they tend to be local relationships that we've built over years and years and years. So yes, it is somewhat unique to our client base.
So now you're based here in Atlanta, your firm?
That's right. We're based in Atlanta. We have offices in most of the Southeast. We have offices in Jacksonville. We've got offices in St. Simons, Georgia, Houston. We have a satellite office in Long Island. So we
but that's more for the account reps.
That's exactly right.
So that's where the, I guess, kind of clusters of clients are.
That's exactly right. So we've actually grown organically through just market movements,
doing good work.
That helps, hopefully. And but we've also grown through acquisition. There is actually a very large trend at the moment of baby boomers. So people who've built up smaller wealth management practices and are now approaching retirement. They maybe have grown too big for a 1 or 2 man shop. And so they come to us and we provide them infrastructure and help.
And then that gives them a path to exit?
That's right. In some instances it does. Yeah.
And then, so now is your perfect client, is it an individual? Is it a family that just has wealth over years? Or is it like somebody who just, a professional athlete that I just got a $10 million contract?
Yeah. There's no perfect client. I mean, the perfect client, well, everyone has their unique circumstances. Our preponderance of clients is typically someone who's later in their career, can have a sight on retirement, probably has most of their liquid assets in retirement savings, and is
looking at their company, like maybe it's in their pension or 401k.
Yeah, pension, 401k. Or in many instances, it's people who've built up their own company and looking for a liquidity event.
So your clients typically are business owners?
Yes, some are business
more so
owners.
Than I worked at, Fortune 500. Now I'm an executive, and now I'm ready to retire. I'm 55.
Again, it's a combination of all for a few reasons. One, our personal service is we will understand your unique situation and help you there. And also we've grown through acquisition. So certain acquisitions come with, more C-suite execs. Some come with, more business owners.
But then is there a minimum? Like I have to have $10 million before I'm even looking at ACG or?
There is no minimum. And the reason is for our smaller clients, we have what's known as a Robo-Advisor. So essentially a technology solution just to fit them in. And we did that initially because a lot of our clients were introducing us to their children. We were managing trusts for clients.
So you wanted to be able to serve that group as well.
So we got this millennial crowd that we need to cater to who seem to be more...
they like those wealth front, those type of kind of, you plug and play and it's just taking money out. It's doing kind of a conservative... I mean, I guess they adjust by some risk tolerance, but it's kind of a... one size fits all. One size fits most.
One size fits most. And so that's how we bring them into the fold, and then we reach out individually.
But you have your own proprietary software that you're using?
Not on the Robo-Advisor side, but our models, so the implementation of, what stocks, bonds is proprietary to us.
But that's coming from you guys.
That's right.
Right. So that's why there might be a robo, but it's your kind of philosophy is behind it.
Exactly right. And then very soon thereafter, we'll reach out to...
Once they get to a certain level, or they've been...
No, not necessarily. It's proven that you need to touch clients early. You need to touch clients often. You need to over-communicate to clients. So, it probably feels good to someone who doesn't have a lot of wealth, and we bring them in and we say, look, we know you're expecting a lot of wealth or you're working towards it, or let's put a plan in place and get you to a point where you've got a personal advisor.
Right. And is that something you typically touch base with your clients annually, quarterly?
Typically quarterly. We'll have quarterly meetings with clients, review their goals, review the performance, and see that we're on track.
And then your super high net worth, they're calling you like, hey, what's going on?
No, not necessarily. They tend to be a bit more patient sometimes because they have enough wealth to live on a day-to-day basis. Not to say they're not engaged and not concerned about that, but they understand what each pool of money is for, and they let it be.
Well, I would think that this is a good time for you guys. Bull markets, all systems are go for everybody, right?
Everyone except me. So as I said to you before, I'm kind of the contrarian in the crowd. And so I'm concerned that we're now, in one of the longest bull markets in history, frankly. We could still go higher, but at some point this will end.
At some point you'll be right.
Yeah. A wrong clock is right twice, right? Twice a day.
So you're always fighting that within your team?
I am. I tend to be a little bit more of the pessimist in the crowd and, always wanting to...
Every party needs a party pooper, right? That's your job in your company?
Unfortunately, I'm going to be the excited one, when there's doom and gloom. Because,
you'll be like, hey, look how smart I am.
Look at all these wonderful bargains we've got.
But that's what it is, right? When it goes down, it is a buying opportunity because you're bullish overall of...
Well, if you have cash, it's a bullish opportunity,
So now, if somebody wants to learn more, what's the best way to get a hold of you guys?
Best way is through our website, acgwealth.com. There's an abundance of material. There's some articles that I've penned, and there's some videos. And
is there like tips, like if somebody wants to get out of debt or they want to start investing? Is there kind of information like that?
There is a little bit of that, but again, each client is unique, and so we really want to bring them in and sit
and then
down.
Really create a custom plan to help them achieve whatever their goal is.
That's right.
And the goals typically, some of them obviously are just keep the wealth going, but it's also if they want a legacy and they want to give back and you want to create plans for all that as well.
Oh, absolutely.
And that might be a different strategy, right?
Yes, giving strategies. There's a whole, estate planning and giving
that's part of your service.
That's correct, yes.
Good stuff. Well, thank you so much for sharing your story today.
Thank you very much.